Stop losing money because your stop loss is in the wrong spot. In the next few minutes, I will show you the exact level to place your stop loss and take profit for every trade. Most traders don't lose because their analysis is wrong. They lose because their stop loss is in the wrong place, or they take profit is too emotional. If your stop loss keeps getting hit before price moves in your direction, or you don't know where to place your take profits without feeling greedy. In this video, I will show you exactly where to place your stop loss, where to place your take profit, and also how to think about risk professionally. These are literally the things sabotaging your success in trading. Let's fix these things once and for all. If you are new here, my name is Precious Sida. I am a smart money trader and I focus on structure and discipline trading. In this video, it's especially important if you are trading Forex pairs, US 30 indices pairs, commodity and BTC USD, because volatility will humble you in the market if your risk placement is wrong. Number one thing you should never do is placing stop loss based on fear. Most beginners put stop loss at 10 pips because they are scared, or 200 pips because they don't want to get stopped out. Both are wrong, extremely wrong at that. Your stop loss should not be emotional. Your stop loss should be technical. It's extremely important that you take note of this. Your stop loss should be technical, and I'm going to be showing you how you can technically place your stop loss when trading. The number one thing that you should do as a trader that really want to grow and make consistent profit, the number one thing is place your stop loss where your setup becomes invalid. How do you even know where your stop loss becomes invalid? Stay with me. I'm going to be showing you exactly what you need to do. Ask yourself this question: if price reaches this level, is my trade idea wrong? That is where your stop loss goes. You know, let me give you a quick example now. If you are buying, your stop loss goes below the swing low. Below the swing low is where your trade idea is invalidated, or below your liquidity, or below the structural low. If you are selling, your stop loss goes above the swing high, or above the equal high, as well as above your supply zone. The reason for all of these things is because if price breaks that level, structure is broken. And if structure is broken, as a structure trader, your trade idea is automatically wrong. Okay? Which is still fine, because now you are able to manage your risk professionally. The second thing you should do when trading to make profit in the market is use market structure, not random numbers. Don't place your stop loss based on random numbers, but market structure. If you trade smart money like I do, your stop loss should be above or below liquidity. Above liquidity when you are selling, and below liquidity when you are buying. Outside imbalance, outside the order block, and also beyond the structural low if you are buying, and beyond the structural high if you are selling, not inside the structure. Don't put your stop loss inside the structure, because if your stop loss is inside the zone, price will naturally weak you out, especially if you are trading gold, because gold is very volatile. If you are trading US 30, these indices pairs, if you are trading commodity pairs, US oil and all of those things, BTC USD is extremely volatile. So if you are trading this kind of pairs, you want to technically place your stop loss where it should be. If not, price weak you out and then go in your direction. There's nothing that pains a trader more than that. Okay, so now that we are done with the stop loss, now let's move to how to place your take profit. So this is how to technically place your take profit without feeling greedy, without feeling confused, and without feeling scared. Some of you just focus only on stop loss. Your take profit is as important as your stop loss. Your take profit is even very, very important. Some people, they don't know how to place take profit, and when price comes, they're already in profit, going properly. Price has maybe like done like 1:3 for them, 1:4 for them, and then they could see reversal against their position, because price literally get to a structural point and started reversing until it turns red, price take them out or they lose money. So it's extremely important to take full profit by knowing these things now that I'm going to be showing you. So let's go right into it. So your take profit should be previous highs when you are buying, previous lows when you are selling, equal highs when you are buying, equal lows when you are selling, and also should be placed at imbalanced fields as well as opposing structure. So your opposing structure, sometimes you are in a trade, for example, you are buying and then price can just go mitigate a bearish order block and then start reversing against your position. So you should be able to tell that, okay, there is an opposing structure here, so I'm taking my profit at this opposing structure. Okay, so it's extremely important. For example, now if you are buying after a retracement, your take profit should be the next high, not somewhere in the middle of nowhere. You don't want to do that. If you put it somewhere in the middle of nowhere, price reverse against you, now you have to force yourself to break even or take a loss, whereas you should be in good profit. Partial profit strategy, this is very good, this is very advanced, and I love that we can talk about this one here. This is how you stop being emotional. You can take partial profit at 1:2. You can even move stop to break even, or you can allow the rest to run to 1:4 external liquidity before you take your full profit. So this is how I personally scale my small accounts. It protects capital and allows you to run in good profit. Before entering any trade, you should know where to place your stop loss, where to place your take profit, your lot size, and also your risk percentage. If you don't know any of these things, please don't enter. If you enter the trade without knowing all of these things I just mentioned, and you are just gambling in the financial market, you are not a trader. The 3 question checklist you should always ask yourself before entering a trade. This is very, very important. Number one is, where is this structure invalidated? If I'm in a buy position now, where should I take my profits? And where should I place my stop loss? I've break it down for you. I've make your work much more easier for you. Now you are not everywhere in the market confused. You know that, okay, placing my stop loss and my take profit, I should look for specifics. Okay, the next thing you should look for again now is, where is the liquidity resting? This is very, very important as well. These are the places, these are your strategic points that you should place your stop loss and your take profit. The third one is my risk less than 1%? Not necessarily 1%, but is my risk more than what my account can handle at this point in time? Now, let's say if you are trading $5,000 accounts and you are risking 50% of your account, that is a lot of risk. But maybe you can handle it emotionally, but that is not what your account can handle at that point in time. The earlier you learn to treat trading like a business, the better for you. Okay, so because your account cannot handle that kind of loss, you don't trade with that kind of amount. You trade with only the amount your account can handle, and remove your feelings completely from your accounts, from your trading capital. It's very, very important to realize that stop loss and take profit are not decorations. They are your business rules. So it's very important. I know some traders that they only risk 30 pips in a trade, and then they only trade 1:3 or 1:4, depending. So you should have your own specific rule too when it comes to setting your stop loss as well as setting your take profit. If you want to grow an account from $100 to $1,000, or pass a funded challenge, or trade a 10,000 account consistently, you must think like a risk manager first and not a dreamer. Yeah, you have the dream to grow your accounts. Well, at this point, to make that dream come to reality, you leave the dream a bit and focus on how to think like a risk manager first. So when you start implementing it, start thinking like a risk manager and start applying all of these things, now you can make your dream come true. If this helped you and you learn some things from the video, please, I want you to leave a comment in the comment section. And also, if you have questions, please leave all of them in the comment section. I will respond to all your questions. And please subscribe to my channel for more videos like this. And I'll see you in my next video. And I guarantee you, you are one step closer to becoming a consistent, profitable trader. Keep following my page, keep watching all my videos, and I also want you to join my community group chat. I'm going to be leaving the link in the description box so you can join. And I'll see you in my next video. Stay blessed and stay profitable. Bye.